Gold price forecast 2020. Back Duong TV would like to wish the whole family a happy and peaceful weekend with their loved ones. Last week, the world financial market witnessed records on both stock market and gold market. Despite the fact that the number of cases of COVID-19 continues to reach a record high in the U.S., the situation of production and business and prospects in the third and fourth quarters continue to deteriorate. However, the U.S. stock market constantly peaked in history, and the gold market, after exceeding $1,800 per ounce, also continued to increase sharply to $1,818 per ounce. Whether the price of gold will go anywhere when the world is still very fragile and bubble stock, inflation can burst at any time. Investors forecast gold price will continue to increase until 2021. There are a number of reasons that both investors and consumers around the world rush to buy gold. International financial institutions all agree that the price of gold will continue to remain high and may even continue to rise until 2021. Gold has started to have an uptrend since 2018, and the price of gold has just ended the second quarter of 2020 to enter the third quarter of 2020 at a record high of 8 years. Many months before, Back Duong TV had a video forecasting the price of gold in 2020 to surpass $1,800 per ounce, and July 7, 2020 is a memorable day for those who are interested in gold. On this day, gold has surpassed the price of $1,800 an ounce after rising for 7 consecutive quarters. The longest rally since the 2007 financial crisis. In Vietnam, gold price is at over 50 million dong per tael, and this is also the highest level in the history of Vietnam gold price. There are many reasons why investors as well as consumers rush to buy gold. The U.S. stock market rally is one of the reasons to increase the demand for gold hoarding. Investing in stocks at this time brings big profits for investors, but most of them only invest in surfing because the current period has a multitude of factors that can reverse the uptrend of the market. Stock at any time. Therefore, many investors do not spend most of their money on the stock market and spend one investment in gold to hedge risks. This is also a principle in the classic financial investment that never put eggs into one basket. It is worth noting that the price of gold and securities began to have a close and positive relationship with each other. What has never happened before is that gold is always in conflict with stocks and taking opposite steps. Previously, gold was a safe asset, a haven to preserve capital. Investors only buy gold when there is a lack of confidence in risky assets such as stocks. However, things are different today. The quarterly performance of the U.S. stock market shows that in today's highly volatile environment, gold and securities are equally attractive. The value at the present time is being turned upside down, and the stock market continues to reflect incorrectly on the economy. COVID-19 is also a direct agent of consumers around the world rushing to buy gold to hoard inflation. Especially in India and China, the two countries with the leading gold consumption in the world. According to data of the World Gold Council, global gold demand for gold in the first quarter of 2020 increased by 1% compared to the same period last year. Gold is considered a safe investment channel with low profitability, but in the last 2 years with strong fluctuations in price, gold has become a significant investment channel. People tend to buy physical gold rather than other methods such as purchasing shares of gold mining companies, index funds tracking gold prices, and gold derivative contracts. Worryingly, the translation of COVID-19 has not shown any end soon. As of July 6, 2020, more than 11.5 million people worldwide have been infected. The number of new cases continues to rise sharply in Latin America and parts of Asia, with India becoming the third largest country in the world and leading Asia among the countries with the highest number of infected cases. Concerns about the second wave of the disease are getting bigger and bigger as a series of countries from the US, China, Iran, Iraq, Korea, Japan witnessed the number of COVID infections rising again. To combat the disease, central banks across the globe have launched a series of stimulus measures. If the second wave of flare-ups explodes, these measures will continue to be used, perhaps even on a larger scale. Geopolitical tensions are also one of the reasons motivating people to buy gold. While U.S.-China trade tensions have shown no signs of cooling down, the U.S. may be able to impose tariffs on UK and EU $3.1 billion worth of imports at up to 100%. Products at risk of being imposed are chocolate, beer, gin, olives, coffee, and some trucks and machines. Previously, the hot trade war between the U.S. and China has contributed to increasing the interest in buying gold from not only people but also many financial institutions. In January 2019, U.S. President Donald Trump and Chinese Vice Premier Liu He reached an agreement under which the U.S. would cut tariffs on some Chinese goods. In return, China will increase the purchase of agricultural products, energy and some other U.S. goods, while also addressing intellectual property issues. However, the Canon virus has prevented this agreement from being fully implemented. Meanwhile, the issue of China through Hong Kong security law made the relationship between China and U.S. become worse. The past is so and now all investors are wondering where the gold price will go? Analysts of FOET forecast that gold prices will continue to remain high or increase further in the next few quarters, especially the current quarter, and the price increase in the third quarter of 2020 will depend heavily on developments. 19. There is no hope that a 19-screw vaccine will be available before 2021. That means the world will remain locally closed, limiting economic recovery. When autumn is also the flu season, the already complex situation can continue to get worse. Analysts at the ABC Capital Market think that the price of gold will remain at $1,600 to $1,700 per ounce. Goldman Sachs analysts have recently raised their gold price projections over the next 3 to 6 months from the previous $1,600 per ounce to $1,650 per ounce to $1,800 to $1,900 per ounce. And prices in the next 1 year are forecast to rise to $2,000 per ounce mark. UBS analysts raised their gold price forecast by the end of 2020 to $1,800 per ounce instead of the previous $1,700 mark and kept the 2021 forecast at $1,800 per ounce. The reasons for UBS to believe that gold prices will be high is because investors buy gold as a hedge against the risk of presidential elections and concerns about rising inflation, tensions between the United States and China, concerned about disease epidemic 19. These issues could signal the actions of central banks globally in the near future. The 19th screw pandemic has made markets more unpredictable and volatile in many respects. The outbreak of the disease has eclipsed the global economic outlook. International Monetary Quarter (IMF) has lowered the forecast for economic growth in 2020 with a reduction of about 4.9%. In April, the reduction was 3%. A number of other issues also have a significant impact on the financial market, including gold. That is, the UK and the EU have hardly made progress in Brexit negotiations. The risk of England leaving the EU without reaching an agreement. The analysts of the USSR Bank are also optimistic about the gold price outlook as they expect that prices will increase sharply in the last 6 months of 2020 and continue to increase in 2021. The analyst of S. Bucket states that gold is still the only key product that shows a positive recovery in 2020 and, for example, gold will bring sweet fruit to patient investors in the third quarter of this year. Because there are many reasons to believe that gold prices will reach at least $1,800 per ounce this year and will hit record highs in the coming years. The reason for the Soviet Union to believe in rising gold prices is because governments need to use these assets to increase inflation, reduce debt levels, reduce global savings and reduce stress. Straight ahead of the U.S. presidential election in November this year. Bank of America has also raised its target of gold price in the next 18 months to rise to $3,000 per ounce, which is 50% higher than the current level. Bank of America CA predicts an average gold price in 2020 of about $1,695 per ounce and rises to $2,063 per ounce in 2021. A record price of $1,921 per ounce was set in November 2011. However, the bank added a number of risk factors that could cause gold prices to go down, such as volatile financial markets, and demand for gold in China and India may decline. In addition, the Fed continued to launch support packages as also the cause of gold price increases until the middle of 2021. However, the profit from gold investment may decrease due to the downward pressure of inflation. The continuous reduction in interest rates of central banks is also the reason for the high gold price in the near future, because gold is a safe haven asset during the crisis. However, the price of gold may cool down by the end of 2021 when vaccines and uncoated drugs 19 are launched and the disease is under control. Once again, thank you for your listening, and if you find this video useful, please click like, register to support Back Duong TV more and more developed. Thank you.